Hi everyone, welcome to West Coast Stackers. We're in Manhattan Beach, California. I was asked this week if silver's going to hit $50 an ounce again, and it reminded me of the story the first time silver hit 50 an ounce back in the 80s. The story seems to be forgotten. The 70s was a terrible time of high inflation, high interest rates, hundreds of bank failures. Nixon took the dollar off the gold standard. We became a fiat currency. In 73, there was an Arab-Israeli conflict and later oil embargo. By 75, the U.S. finally was out of Vietnam, and wrapped in this whole crisis were two brothers, William Hunt and Nelson Hunt, trying to corner the silver market. These guys were serious silver stackers, and there's stories of them receiving 55 million ounces of silver at one time. Before we get in our story, let me show you a couple pieces of silver in the natural light down here at the beach. Don't beat me up in the comments too badly for this first one. It's my American Eagle 2011. Here is the obverse and the reverse. It's my everyday carry. I keep it in my pocket each day. I bought it already circulated and a little worn, and in the light it really shows the milk spots. The other is a 2020 Britannia. It's just gorgeous in the sunlight. We'll be right back with our story in a second. Welcome back to West Coast Stackers. I have an article for you from Business Insider, Kim Iskian, 2016. We have pictured here Nelson Hunt and William Hunt. They were born into a wealthy Hunt oil family in Texas, began their careers in the 50s and 60s, but their attempt to corner the silver market didn't begin until the 1970s. They started accumulating silver in 1973. They did this by purchasing physical silver, silver futures contracts, and mining operations around the world. It gave them control over huge portions of the world's silver supply. And here's a story to help you understand the scale of these two silver stackers. In the early part of 1974, the brothers accumulated futures contracts that amounted to about 55 million ounces, which at that time, this accounted for roughly 9% of the world's silver supply. The futures contracts allowed the brothers to purchase silver at a predetermined price on a set date in the future. And typically traders of a commodities futures sell the contract before the agreed upon date instead of receiving the physical commodity itself. Taking delivery of 55 million ounces of silver would be a massive logistical challenge. However, the brothers went against the norm and took possession of physical silver instead of selling the contracts. Bunker Hunt was concerned that the U.S. government might seize his silver as it had done with gold in 1933, and bringing the silver into Texas would require a state tax of 5%. To keep the silver safe, the Hunts chartered a jet, or several jets actually, to fly it into Switzerland under armed guard in the dead of night. I have another article for you from CNBC TV 18 by Yashi Gupta. The backstory when the Hunt brothers cornered the silver market in the 70s. The Hunt brothers had at least three sources of capital investment. The first one was their inheritance from the father who had passed away in 74. The second one was the reputation and the ability to borrow from banks and other capital investors. And the third one, which I believe was the most detrimental, was their approaching the Saudi investors in order to fund their silver market expansion. The Saudis served a polarizing role in their downfall. The brothers approached the Saudis and successfully raised money to continue the push to the silver market, but the involvement of Middle Eastern investors drew the attention of the U.S. government. Just a reminder, a few years prior, Middle Eastern countries led by the Saudis began an oil embargo against the U.S. and subsequent rise in oil prices that resulted in the U.S. economy being hit hard by inflation. Just to recap, as a result of the Arab-Israeli conflict in 73, these Middle Eastern countries led by the Saudis blocked the sale of oil to those countries that supported Israel in the war, including the U.S. So from October 73 to March of 74, this oil embargo devastated the U.S. economy and was a shock to the global economy, leading to a sharp increase in oil prices and contributing to a period of high inflation in many countries, including the U.S. The U.S. inflation rate was 6.2% in 73, but it jumped to 11% in 74 due to the effects of the oil embargo. The Hunt brothers were already on a conflicting path with the U.S. government, but to be involved with the Saudis and the economic shock from the oil embargo being a still raw wound, it had elicited an understandable reaction from the U.S. government. The Hunt brothers faced serious legal consequences for their actions. The Hunt brothers' attempt to manipulate the silver market eventually resulted in several legal issues. In 1980, the U.S. Commodity Futures Trading Commission, the CFTC, launched an investigation into the Hunt brothers' activities. They alleged that the Hunt brothers and their associates had been engaging in illegal market manipulation and insider trading in an attempt to control the price of silver. And as a result, the CFTC investigation, the Hunt brothers and their associates were hit with a civil lawsuit seeking serious damages. The lawsuit accused the Hunt brothers of violating federal commodity trading regulations and ultimately resulted in a settlement that required the Hunt brothers to pay one of the highest fines in CFTC history. The Hunt brothers were also involved in a legal dispute with a mining company in Peru called Minpeco. The company alleged that the Hunt brothers had defaulted on a silver purchase contract and won a lawsuit against the Hunt brothers and a trading partner, Mitsui & Company. The court ordered Hunt brothers and Mitsui to pay $134 million in damages to Minpeco. This lawsuit forced the brothers into bankruptcy. We discussed the negative attention the Saudi investors brought to the Hunt brothers, but their silver contracts pushed the commodity market to the edge. In 1979, the brothers placed orders on the exchange of 43 million ounces of silver and wanted physical delivery. The exchange panicked. They had already delivered 120 million ounces the previous month of October and would have been squeezed if they were required to deliver 43 million additional ounces, forcing them to go outside the exchange to meet the need. This was the turning point. In 1980, the U.S. government and commodity exchange changed the rules. The exchange placed into effect rules preventing anyone from buying silver and allowing only sale to exchange-approved buyers. The Hunt brothers, who held massive holdings in silver, couldn't buy more and risked triggering a panic if they sold. Despite their efforts to prop up silver prices, on March 14, 1980, the U.S. government, through the Fed chairman Paul Volcker, ordered banks to curtail loans for speculative holdings of commodities, which likely targeted the Hunts. On March 26, the Hunts received a $135 million margin call they couldn't pay. Their domestic sources of capital had been cut off by Volcker, leaving them with no options and causing the broker to sell their silver, leading to a sharp drop in silver prices. It appears that four things led to the brothers' downfall. 1. The commodity exchange changed the rules on the brothers, not allowing any individual or group to hold more than 3 million ounces in silver contracts. 2. Those holding more than 3 million ounces must sell by February 1980. The third one, Fed Chairman Paul Volcker ordered banks to curtail loans on speculative lending, shutting down an avenue of the brothers' capital. The fourth, the margin call on the brothers' holdings in March caused the brothers to liquidate the position and sell the silver into a rapidly saturated market, causing them and the investors to lose millions. What was the Hunt brothers' motivation? The story of the Hunt brothers and their silver stacking is phenomenal. These brothers were motivated by their fear of economic uncertainty. Much like many modern-day silver stackers, they saw high inflation rates in the U.S. in the 70s as a threat to their wealth. They believed that the government's decision to print excessive amounts of paper currency would eventually lead to the collapse of the U.S. dollar. To protect themselves from these potential losses, they decided to stack physical silver, which they believed would hold its value even in times of economic turmoil. The Hunt brothers' decision to invest in silver was a bold move that was based on the same principles that inspires many modern-day stackers. Precious metals are a store of value against the loss of value over time of the fiat currency. I remember hearing YouTube personalities wondering if silver could hit $50 an ounce again. Silver spot prices in the 70s started at $1.94 an ounce and hit $50 an ounce in 1980. And today it starts around $25, $26 an ounce. So it should be very easy to reach $50 an ounce. The question is, could we see another 2,400% increase similar to the 70s and 80s? The 70s were a volatile decade of political unrest, war, oil embargoes, inflation, bank failures. These all had a role in the rise of silver spot prices. But in my opinion, the brothers' attempt to corner the silver market sparked a wild speculative ride that surged silver prices. Can we use the 70s and 80s as a roadmap or a lens to view the future of silver prices? I believe there's at least 4 points that we can draw on from this period, and I'll give you a bonus thought at the end. First, there is definitely a relationship between inflation, interest rates, and silver spot prices. When inflation and interest rates hit, silver spot prices are on the rise. People are awakened again to the safety of precious metals and begin to move to them as a safe haven. Secondly, in this inflationary environment, there will be bank failures. We had 3 in March and recently PacWest, and yes, there are probably more to come. As stackers, knowing this, we should be less alarmed than the average Joe as we take the emotional element out of stacking. Hopefully bank failures won't rattle us. Third, what I believe moved the price on silver was the Hunt brothers, or what I might call a financial hammer in economics. Before the Hunt brothers had any noticeable effect, inflation, interest rates, political upheavals, wars, embargoes, all in turn had influence on silver prices. It was that financial hammer when investors and speculators caught wind of the Hunt brothers' actions that skyrocketed prices on silver in 79 and 80. Fourth point, we don't know when or what the next financial hammer might be. We have the dollar as a world reserve currency in crisis, with BRICS nations already appearing to commit to a Chinese yuan currency. But we don't know when or if it can be averted. Bonus thought. When inflation occurs, we don't reset back to original prices. The dollar loses value and certain prices become baked into the system. The loss of the value of a dollar is inevitable as a fiat currency. Our goal here at West Coast Stackers is trying to make sense of those economic factors that can affect us as stackers, to find a balance on the extreme or false positions. I believe in this window of 2023, the most grave financial concern we have as stackers is inflation and interest rates and the impending bank failures we will see this coming year. De-dollarization is a major concern, but the most immediate threat appears to be the economy, recession, and bank failure. I'm not a financial advisor. These are my opinions, and there's no exact ways to predict the price of silver, how high it would go, or when or if it will come down. As stackers, we have our fingers on the pulse of the economy. We pay attention to all financial indicators. Understanding the economy historically will be a tool in our toolbox as we weigh and measure and anticipate what lies ahead. So continue stacking, stay vigilant, and remember that freedom to invest is a fundamental right that we must protect. Thank you for being part of West Coast Stackers, and let's keep stacking.